Hello there everyone, today's video is all about non-doms and residency and all about what's happening right now with the various news on certain politicians in the UK and their family. So I wanted to explore what exactly is all the fuss from a technical perspective. So, first of all, if you are resident and domiciled in the UK, you pay tax on your worldwide income and gains on an arising basis, meaning wherever in the world the income is sourced from, you pay UK tax. So that's the first thing. Doesn't matter if you leave it offshore or bring it onshore, bring it back to the UK, it's what we call an arising basis, you're taxed on it. That's if you're resident and domiciled. If you are resident but non-domiciled, then the rules are different. The UK sourced income is taxed in the UK, but all the income that's sourced overseas, as long as it's left overseas, the default position is that it's not taxed in the UK. So straight away you're at an advantage to someone who is domiciled by being non-domiciled if you have overseas income which is not subject to tax if you leave it offshore, subject to UK tax. So what are these concepts? Well, residency is all about where you live, basically. Where do you spend most of your time? And if you spend most of your time in the UK, you are a UK resident. Domicile, on the other hand, is all about your family heritage. Where is your ancestry? Where are you from originally down your family line? Specifically, more technically than that, it's all about your father's place of birth. It doesn't matter if you were born in the UK or overseas, it's all about where your father was from, and you acquire what's known as a domicile of birth from your father. So, even if you might have been born in the UK and you've been resident in the UK for a while, you still potentially will not have a domicile in the UK, certainly not for inheritance tax. But there are rules that apply differently to domicile status for inheritance tax and for income tax. So, what specifically is political around domicile status is because, like I said at the top of the video, it is so much more favourable for a non-dom who may be in the exact same situation as a dom who has the same amount of wealth and all over the world, but by the mere fact that they are non-domiciled and they leave it offshore, they don't have to pay UK tax. Whereas the same person or someone in the same circumstance who is domiciled in the UK and resident, even if they've got exactly the same income profile, all the different territories, they are taxed on it regardless, whether they leave it offshore or bring it into the UK. So this has been around in Britain for years, decades and decades and decades, the non-dom status. And it's become more political. It really started not just in the last few weeks, but about 10 years ago. And the government said, okay, look, we want to be seen to be doing something about the non-dom status, but we're not going to wipe it out completely. We're not going to get rid of it because it will upset too many wealthy people who are non-doms who will just take their business from the UK and go and set up anywhere else. Because forget purely just their tax, but what about all the wealth that they create, all the jobs, all the pay as you earn, all the VAT, all the corporation tax that they are, directly responsible for? If you upset them too much by taxing them until the pips squeak, then they're just going to go somewhere else. So the government said, right, we're going to be seen to be doing something, but we're not going to just bin off the non-dom status at the stroke of a pen in the next Finance Act. So non-dom status still around, but what they did to make it less attractive for non-doms, particularly those of more modest means, was to bring in an annual charge. And this annual charge basically said, look, if you have been resident in the UK, so you've been living here for 7 years, once you get to 7 years, you have to pay £30,000 a year for the privilege of not being taxed on your overseas income if you leave it offshore. If you bring it into the UK, if you remit it to the UK, then we're going to tax you. But if you leave it offshore, we're not going to tax you. But you've got to pay 30 grand. So for decades, there was no charge all of a sudden they started saying, we're going to charge you for it, Mr. Non-Dom. And then, if you've been here for 9 years, the charge increases. So £60,000. So non-doms have to pay £60,000 a year for the privilege of not being taxed on their overseas income that is left overseas. Now, that change in the law a few years ago, it's only been in a few years, brought a lot more non-doms into paying UK tax, because basically, from a cost-benefit analysis, the non-doms all of a sudden said, well, look, if I'm being charged 60 grand a year and I've only got 100 grand of income parked in this country over here, well, the UK tax on that would only be £40,000. So why would I pay £60,000 just to save £40,000 of tax? So they say, you know what, we'll just pay the UK tax. But of course, those who are really well-off non-doms, who are subject to paying millions and millions of pounds if they brought the income into the UK, well, they say, yeah, sure, 60 grand, that's fine, because I'm still several million better off by leaving it overseas from a UK perspective. So the change in the rules caught a lot of non-doms with modest wealth, and they said, yeah, we will no longer be taxed as non-doms, we'll repatriate our wealth or be taxed in the UK and our overseas wealth. But those who are significantly wealthy will pay this annual charge. And then, once you've been resident in the UK for 15 years, that's when you are deemed domicile for income tax purposes. So there's no amount of money that can get you off from paying UK tax on your worldwide income. So once you've lived here for 15 years, you can't just write a check anymore to HMRC to get out of paying the tax, basically. So these are not loopholes. This is not clever stuff where you're paying lawyers thousands of pounds to exploit loopholes. This is just the law. That's how it's been. So non-doms always had favourable status. They started to tighten it up for political reasons a few years ago, but not wanting to upset the mega wealthy non-doms who could afford to just pay the 30 grand or 60 grand a year up to being here for 15 years. Then they have to pay the full amount. So that's what the government did. Now, of course, once you get to the stage where you can no longer pay your 60,000 a year to HMRC to avoid paying the tax, then the money is subject to UK tax. Now, there is, of course, because we live in a global economy, we can't just look at UK tax on someone who is UK resident. Yes, they may be non-domiciled, but the point is they've got things going on all over the world, so some of that income may be taxed somewhere else. So the companies overseas paying dividends to that individual who is resident in the UK, they may be withholding tax on the dividend, who knows? So the point is, that is unfair to be taxed twice on the same income stream, once in country over here, once in the UK, and that's when the series of double tax treaties, the tax networks, the double tax relief kicks in to say, okay, at that point, if we're now going to charge the non-doms on everything they earn overseas, charged in the UK for the UK rates of tax, but if they've also paid some tax overseas, then that tax would get credited against their UK tax bill so that they are not suffering double tax relief. And that is how international double tax treaties work. What is more confusing about the non-dom status is that it's different for inheritance tax than it is for income tax. So this concept of deemed domicile, which means that if you've lived in the UK, if you've been a resident for 15 years, you will then automatically have to pay UK tax on your worldwide income, subject to double tax relief, as I've just said. However, the same rules don't apply for inheritance tax. So inheritance tax, which is 40% of the value of your taxable estate when you die, which again for non-doms of significant means can be millions and millions of pounds, that still does not come under the UK tax jurisdiction whilst they are non-doms, even if they've been here for 15 years. It's only the income tax that starts to be paid, not the inheritance tax. So two different subsets of rules for non-doms, one for income tax, one for inheritance tax, and they are completely different. So who said the UK tax code was complicated. Right, so that's an overview there on non-dom status, residency, very topical at the minute. It's all over the press. But basically, just to dispel a few myths here, when people say, oh, well, the person is non-dom, so they're not, it's their choice. They were born non-dom. Yes, true. But then also, that 30,000 or 60,000 that you pay each year until you've been here for 15 years, that is a tick the box exercise on the tax return. It's not automatic. The individual can elect instead to not pay the 30 grand or 60 grand, but instead be taxed in the UK on millions and millions of pounds. So yes, you could say, well, why would you? Why would you choose to do that? But then, of course, given the context, there still is that choice available. And, what would happen if it was revealed, as it has been in this case with very high profile individuals in the UK. But nevertheless, there has been that choice for the last few years as to whether or not to pay the so-called remittance charge or be taxed on the worldwide income. The choice was taken to tick the box, pay the 30 grand, leave everything else to be taxed overseas. But that was optional. Now that choice has been made to stop paying the charge and instead pay the full amount of tax, but that could have been done earlier. But like I said, for most people, you would choose not to do that. But if you are the spouse of the rule setter in the country who sets the tax, then yes, maybe you might not have wanted to do that for various reasons. But there you go. That's just an overview of how the remittance basis, the non-dom status, the residency status works. Is there anything else that I missed off? No, I don't think so. But it's just worth bearing in mind, again, that there was nothing particularly loopholes done here. This is all playing by the rules that are in place. Now, whether or not the non-dom rules are still too generous, that's up for debate. Like I said, for income tax, you've got 15 years and then that's it. Maybe they may change the rules again on the back of this, who knows. But if you like this video, please do subscribe and I'll see you soon.